so welcome to Module 3. In the last module, we focused on market structure and breakouts versus ranges. Now we're going to translate that into execution. How to actually enter a trade, where to place your stop, how big your position should be, and how to take profits without emotions taking over. So these are the objectives of the module. We want to learn how to plan our entries with precision, understand when and how to take profits, master risk management to protect capital, build a repeatable execution checklist that you can follow every time you trade. So let's start with entry planning. A good trade starts before you click buy or sell. First, I want a clear confirmation that might be a breakout, a retest of a level, or a clean reversal candle at structure. I don't just click because price looks like it might move. Second, I never enter in the middle of nowhere, meaning I don't enter mid-range without structure or volume to back it up. Third, wherever possible, I prefer limit orders so I can control slippage and know exactly what price I'm getting at. This really helps with over-eagerness of entering a trade because you're feeling FOMO. And fourth, you want to document the reason and conditions for every single trade. What's my reason for entry? Where is my stop? Where is my target? If you can't answer those three, you shouldn't take the trade. Here are some common entry triggers that I look for. Not all of them do I look for every single time, especially the last one. I've kind of pivoted away from those, but you can still do that. So a breakout confirmation after volume spike is a really good one. Looking at volume increasing can really help you understand where momentum is flowing. So price closing beyond a key level with strength and not just a quick wick is really good. Retesting of previous resistances as new support, so a classic breakout retest pattern, or bullish engulfing or hammer patterns near key levels, and reclaiming an EMA or structural pivot in the direction of the trend. The idea is that your entry isn't random, it's tied to a specific repeatable trigger you can describe in one sentence. Stop loss placement is really, really important. You always want to define your risk before you enter a trade. You should know exactly where you're going wrong. Where you're going wrong, meaning where you want your trade to actually stop you out. So where I like to place stops is beyond a certain structural level, like a resistance level or a support level. So below a swing low for longs or above a swing high for shorts, not at some random percentage. I avoid stops that are so tight that they sit directly in the noise because you'll get wicked out all the time. And if I genuinely don't know where a logical stop should go, that's my signal that I'm entering too early or the setup isn't clean. Position and sizing. Let's talk about how big your position should be. I usually like to risk 1 to 2% of my count per trade. As a beginner, that should be something you follow. You can increase risk as you get more experience depending on how clean of a setup and how much the probability of the setup is going to go in your favor. So the basic formula is your position size should equal your account size times your risk percentage divided by your entry price subtracted by your stop price. So if you have a $10,000 account and you're risking 2%, that's $200. If your stop is 5% away from your entry, you take that $200 divided by 0.05, which gives you a $4,000 position size. This keeps every trade controlled so one bad idea can't blow up your account. You need to survive. You need to have longevity in the money that you're working with. Taking profits is really important, and people think it's easy, and it's not. I want my profit targets defined before I enter. I usually base them on prior highs and lows, important structure, or measured move targets. I'm a big fan of taking partials because by taking partials, you remove the stress of having all your capital tied up into the trade and letting the rest run. And when I started doing that myself, I was able to capture a lot more profit because I didn't just full clip and take all my profit and feel FOMO when the price kept on going up. When price reaches around a 1-to-1 risk to reward, I often move my stop to break even, so at least I'm not taking an L on that trade and it's like I didn't take a trade. And no trade is the same as taking a trade. 2-to-1 risk to reward, I'll take more off and trail the stop. So I'll have my stop loss trail, so then at least I'll exit the trade with profit. And you want to never exit the trade emotionally. You want to exit by your system or your rule. Don't be greedy. Risk to reward is really important, and that's what will make your system work, right? So a good entry point or starting point for most beginner traders is aiming for at least a 2-to-1 risk to reward on your trades. That means if you're risking $100, I'm aiming to make $200 or more. If a setup doesn't offer a clear 2-to-1, you should often skip it. There's no edge in risking a lot to make a little. Remember, good traders don't win every trade. They make sure that when they do win, the reward outweighs the losses from trades that don't work out. An extremely important thing is journaling and reviewing your trades. After each trade, log your entry, your stop, and your target and reason for the trade and how you felt. At the end of the day, review your journal as, did I follow my rules? Were my stops and targets logical? Did I respect my risk limits? And when I started journaling and started taking my trading more seriously, journaling, I became profitable within 3 weeks of journaling. It was crazy. Being able to reflect and see where you went wrong, how you went wrong is so important. And reflecting and improving on that issue that you're faced with or you're dealing with. So here's for the homework. I want you to take the entry and risk checklist that I'll have included and plan 3 hypothetical trades. For each one, you want to write down your entry trigger. Like we discussed before, is it a retest breakout? Is it a break of support? So those could be your entry triggers and your stop loss placement, right? Where you're going to place your stop. Is it a random stop? Is it a fixed percentage? Like, where is your stop? Your position size based on your risk percentage and your targets and expected risk to reward. The goal isn't to be right about the market, it's to practice the process of planning clean, structured trades. So that's going to end this module. We want to enter trades with structure. If you enter trades without structure, you're gambling. Stops and position sizing are your protection. Profit taking and risk to reward keep you in the game long term, and journaling ties everything together and is crucial and critical for you improving. In the next module, we'll take all of this and plug it into a complete trading system so you have a clear rule set from start to finish. I'll see you in module 4.